Well, the year of the trader continues to build upon itself, and we are starting to see some bigger moves or faster moves taking place, which is something we certainly have been expecting. We're expecting this intraday volatility we've been seeing in the market to ultimately spill over into the daily charts, and that's exactly what's happening. So let's get you an update on Palantir Technologies. The ticker symbol is PLTR. Let's have a look at the charts and see what we can make of this. Well, for starters, just before we even look at the near term, just keep in mind that from a trending perspective, this is why we use our market rover trend following algorithm. You can see this stock remains in a bullish trend, and we've had this in a bullish trend. You can see since essentially May of 2023, the stock remains up about 690% from that point. It was up as much as over 1,000% since then. So it remains bullish trend. That has not changed. But when a stock like this starts to go vertical, that's when we can expect much more pain as far as volatility is concerned. That's exactly what's been happening, which is also one of the core things of volatile markets, is that when things go from a steep slope to a vertical slope, we can expect these sharp mean reversion moves, and that's exactly what Palantir has been doing. So now what? So a lot of people, and we know this empirically by looking at the data, a lot of people on the retail side particularly started chasing the stock after earnings, after it gapped up 24% or so on February 4th. Then the stock rallied for another week and a half, and it's now down 30% in a straight line in a handful of days. It's classically how it works. That's also why I'm so concerned about the retail investor this year, because I think they're going to get hurt if they don't learn how to actually trade and not just buy dips or buy breakouts. But what now? So what we're going to start to see a lot more this year, as volatility is now spilling over into the daily charts, is likely these gap fills. So the up gap from February 4th has, as of the time of this recording, been nearly filled. There's a little bit more. The entire gap would fill probably somewhere near $80. But for the most part, that gap has been filled, and a lot of people who bought up here are now sitting on bad losses. If one would have bought a call spread or some sort of short-dated options, it's essentially evaporated. As far as I'm concerned, the stock is likely going to undergo a consolidation phase. I think the initial sharp move has taken place to the downside. It certainly can continue to the downside. It can bounce, but I think the higher probability trade here, or forecast on my part, is that the stock is now undergo some sort of a consolidation phase. And I don't know, obviously, how deep that consolidation phase is, but I think the high probability trade of the stock mean reverting, which the signal for that came on the 19th of February. That's why we made the call that the stock might go into the low to mid 80s. That trade is over, so now the next trade is likely going to be something where the stock just kind of bounces around in a pretty wide area. What I'm looking for at this point is for the stock to get extremely oversold, and then we'll have a better reference point of where it might start to bounce from. And if that doesn't happen, if the stock gives us some sort of a feeble bounce, I'm looking for where there might be resistance. So right now, it's kind of in no man's land. It's mean reverted. It's maybe what ends up being the middle of a trading range. So I'm not really looking at making high probability bets here, but we're looking for the next move in the stock that's going to give us a higher probability of where it might go. What I think is unlikely is that the stock just basically does the classic thing, what's been happening for the past few years, which is it drops and then it goes right back to fresh all-time highs by the time it comes back from making a sandwich. I think that's unlikely. It's always possible, but I think it's very unlikely for that to happen. I think that's the broader market is going to have a very hard time with that kind of a trade setup this year. And again, that's why I think a lot of people are going to get hurt very badly this year, because that playbook that's worked so well for so many years is probably done for the time being. So patience, I think, is the point right now in Palantir. It's been a great run to the upside. Again, we've been on the right side of that one with our trend following market rover technology, and also certainly the mean reversion move to the downside. We played that one with our clients in the chat room. But I think now this is a consolidation phase, and we're waiting for the next move. We'll keep you updated.